Welcome back. Here watching Market Cafe, and it is that time of the show when we go more stock specific, and we have Vamakshi with us in the studio. Vamakshi, good morning. So tell us, what are the stocks that we need to watch out for today?
Well, absolutely. A very good morning to both of you all. Let's first start off with some of the earnings that came in yesterday. We have the first one coming from JK Papers. They reported a strong set of numbers in the third quarter. Net profit saw an uptick of 119% on a year-on-year basis. It has gone up from 150 crores to 330 crores. Revenue saw an uptick of nearly 50% when we look at it, up from 1,094 crores to 1,643 crores. Apart from that, we're also seeing that the margin saw a very sharp improvement from 29.4% to over 35%. LIC Housing, however, reported a mixed set of numbers. If we look at them, revenue came in higher by nearly 16%, but it was the net profit that actually saw a dip of nearly 40%. BLS, on the other hand, came out with a strong set of numbers, reporting a nearly 93% jump in the revenues. They have gone up from 227 crores to 438 crores. PAT, however, saw an increase of nearly 64%. TCPL Packaging also coming out with a strong set of numbers. We're seeing an uptick of nearly 37% on the revenue, while the PAT has gone up by nearly 71%. Balaji Mines has reported a weak set of numbers. We saw that revenue saw a marginal uptick of nearly 4% on a year-on-year basis. PAT, however, has gone up by nearly 18%. But however, in the commentary that came out in the press release, the company mentioned that margins are expected to improve from the first quarter of FY24. They will be spending nearly around 400 to 500 crores as a part of capex. They have already started construction for their methyls amines plant, and that is expected to commission during the second half of the next year. Apart from that, we also have Paytm on our radar. Now, that is on the back of a con call that actually took place yesterday, and we have commentary that came in from Vijay Shekhar Sharma, and he says that EBITDA profitability growth rate could become two-digit in the future and will be sustainable. Regulatory risk management is expected to remain the top focus. Apart from that, Ultratech Cement is also on our radar. Now, the company has announced commissioning of a 1.5 MPTA brownfield cement grinding unit in Odisha, and that has taken the company's total cement capacity in the state of Odisha to 4.1 MTPA. UPL is also on our radar after LIC has gone ahead and cut its stake in the company from 9.2% to 7.2%. And lastly, watch out for Cipla. The company says that the IT department has conducted search at some of its offices as well as manufacturing units. So these are all the stocks that you should watch out for in the trading session today.
Well, thanks so much for that, Vamakshi, but you stay here because you've also been going through all the brokerage notes that have come out today, and talk to us about the key ones, the important ones.
Well, absolutely. Let's first start off with Varun Beverages. Now, as you know, the company came out with its Q4 earnings yesterday, and we in fact have a note that came in from Bank of America. They've gone ahead, maintained a buy rating on this stock, given a target price of 1,530 per share, and in fact, they've actually gone ahead and raised the target price. Now, the company's results were a beat. In fact, they are set up for nearly 34% profit CAGR through 2025. The newly acquired territories are performing well, and they're leading growth. The valuation is also offering room to re-rate. So on the back of that, Bank of America has maintained a buy rating on Varun Beverages. We also have LIC Housing in focus. Morgan Stanley has maintained an underweight rating on this stock. A weak set of numbers that came in, and they've gone ahead and given a target price of 320 per share. Now, what they're saying is that quarter 3 was a weak quarter, and in fact, on the PAT front, the PAT was nearly 55% below estimates. Slower improvement in loan spread actually caused a 12% miss on the NII front. Higher operating cost also cost nearly 17% miss on the PPOP front. Apart from that, lastly, we will be watching out for Paytm. JP Morgan has maintained its overweight rating on the stock, given a target price of 950 per share. Now, what they're saying is that incremental profitability gives a peak on forward numbers. The financial services scale-up remains on track. They've upgraded the profits assumptions, but they've moderated the GMV growth assumptions. So those were all the important brokerages that you should watch out for.
Well, thank you so much, Vamakshi, and do watch out for all the names that she mentioned.